Let's talk to Tim Harrison. He's the Head of Wealth Management at Linear Investments. Very good morning to you, young Tim.
Good morning.
Right, the week ahead, we've got a number of UK companies reporting this week. Prudential, is there a chance that they'll talk about the potential breakup of the company in terms of selling the Asia asset?
Well, I think it's been one of the stories that's been on the tip of many scribes' pads for some time. The whole insurance space has been or is under review, so to speak, as to whether or not they want to more centralise and keep things sort of European and other, or whether or not being a global player is the right place to be. Obviously, there has been some M&A at the start of the year. There is continuing musings as to whether or not there could be further M&A within the space going forward. It's going to be an interesting one, but I mean, to be honest with you, at the moment, asset prices are so extreme that if you are taking a company over, you've got to be sure that it's in the best interests of the underlying shareholder.
Understood. In terms of the Nasdaq last week, down 4.25%, I think, at the close of business, but a slightly weaker non-farm payroll. Are we all eyes on the US this week?
Well, I mean, in terms of the market as a whole, and I alluded to this a few moments ago, you've got companies reporting at the moment where share prices are so high, they've either got to smash their figures out of the park for the share price to continue higher, or any slight hint of a negative sentiment from the minutes, that their share prices are getting hit. Now, you saw it last week with the FANG stocks. Some of them are driving higher, some of them are getting hit. The likes of the Teslas, for example, their figures I didn't think read particularly well, but they're not as bad as expected, so the share price goes up. Apple obviously broke the $1 trillion valuation. It's going to be interesting to see Berkshire Hathaway reporting this week to see excluding Apple, how their figures actually are. But in terms of the UK, we've got, well, I suppose you're looking towards the dominoes, and I suppose that's really it in terms of UK companies.
Well, in terms of the currency, obviously, US dollar against sterling below 130. Mr. Dr. Liam Fox talking, Mr. Carney talking. How political is your portfolio at the moment?
Well, at the moment, as we have been for some time, we are looking for value opportunities, and there is still plenty of value out there. Again, it's a case of stepping forward very lightly because the markets are still at high-ish valuations. In terms of the currency, obviously the FX market have been probably the most active market to be able to trade. I don't trade them, we don't trade them per se, but when you are looking at the dollar going from sort of 150 down to early 120s, back to 144, down to 130, between the Brexit vote and now, there is obviously some money to be made there for both traders and also companies. So it's not a trade that I particularly like because I think you can get burnt very easily and very quickly on the words of for argument's sake, David Cameron in Davos some time ago said a few words off mic, and that caused a move in the FX markets. I don't like it, but I think where we are around about the early 130s is probably where we're going to stay for the short term.
And finally, they're talking about this heat wave running to the end of October. Should we be buying the water companies on the back? I read recently the average person in the UK uses 141 litres of water a day.
Well, interestingly, I think it was United Utilities back end of last week cancelled their hosepipe ban, so obviously they're not subscribing to this heatwave phenomenon. I mean, look, the utilities have been, in my opinion, unloved for some time. Their share prices, in my opinion, are undervalued. Whether or not they are a good value opportunity at the moment, I don't like them. I think their infrastructure is so outdated that their spending on that is going to impact their ability to increase their dividends, etc., which is why you really hold these boring companies. I think there's plenty of opportunity out there. Utilities isn't one of them.
Tim, on that note, thank you very much indeed.